What's going on YouTube? Welcome back to Currency Counts, where I cover all things money. So I've made a lot of different credit product review videos on my channel, and it always comes back to the same question: which one's the best? Today we're going to compare some of the more well-known credit building products on the market to see what's the best fit for you. Stay tuned. The cards we're comparing today are the Tomo credit card, Chime credit builder, self credit, credit strong, and the extra credit card. Every single one of these products is designed to work in the same way. Make your payment, reports to credit bureaus. At the end of the video, I'm going to share a credit building product that's not on the list, but worth taking a look at. So let's start with the first one, the extra debit card. The extra debit card has no interest or security deposit, no credit check, which means everybody's pretty much approved, and the ability to earn rewards. So the way the extra debit card works is they give you a spending limit based on your banking history. You will have to link an existing bank account to be approved, and when you use a card, they'll automatically withdraw the balance the next business day. The more you use a card, the more your spending power will go up over time. Then at the end of the month, they total up the transactions made with the card and they report them to the credit bureaus, Equifax and Experian. So in a sense, you're getting credit, but not really. So just remember, any credit building product that you're looking at, whether it be one of these on the list or something totally different, you're really not going to get a credit limit. All these cards are good for, or all these products are good for, because some of these aren't cards, they're loans. They're good for building credit, not actually borrowing money. Think of these products as a stepping stone to actually being approved for borrowing money. So the one thing that would put this card at the bottom of my list is a subscription. There's a $7 a month subscription to use this card. So you're paying $84 a year to use this product. To me, that's a big thumbs down. So I am skimming over all these cards. If you want to see a more in-depth review, be sure and check out the standalone videos I have on all these products we're covering today. All right, so the next one, and one of my favorite right off the top, is the Chime Credit Builder. So the Chime Credit Builder is absolutely free. There's no fees, no one-time fees, no subscription fees. They don't check your credit at all, and they do report to the 3 major credit bureaus. All you need to do is create a Chime bank account, link in description to get a free $100 when you deposit your first $200. After you set up your bank account, you can apply for the credit building product, and remember, they don't check your credit score. So from there, what you can do is move money that you have in your Chime bank account into your Chime credit builder account and use that card just like you would any other, and they will report it to the 3 major credit bureaus. So what you're doing is using your own money, but it's instantaneous. You don't have to wait for a payment to clear in order for you to use that account. You can use it right away, and it's free. No subscription fees, no miscellaneous fees. Even the bank account is free, and it's an actual credit card you'd be getting, not a debit card like the extra card. So 100% I choose this product over a secured credit card, because a secured credit card has interest. This card doesn't. On top of that, a secured credit card is going to ask you for money up front. Let's say $250. You can use that $250, but they're going to charge you interest on using your own money. And it's not 5-10%. It's usually about 25 to 30%. And a lot of these secured cards, for whatever reason, charge an annual fee. So you're going to be paying $80, $100 just to have that card open and using your own money. This card has no fees at all. So second card, I'd put it right up there in a good spot. So next we're going to check out Credit Strong. And Credit Strong is not a card, it's a secured loan. So let's see how this works. With Credit Strong, you don't need a credit score, no upfront security deposit, and no credit check. Easy approval. So it's kind of, I don't know if I would call it funny or interesting about this product, is that it's a secured loan, but they don't call it a secured loan. They call it a savings account. So the way Credit Strong works is you apply, they're not going to do a credit check at all, hard or soft pull, no credit check at all. They're going to give you a loan, but that loan is locked into a savings account that you can't touch until that loan is paid off. You're going to make your monthly payments, and those payments are going to be reported to the 3 major credit bureaus, Equifax, TransUnion, and Experian. And once that loan is paid off, you're able to access that money you have in that savings account. So let's check out the pricing here. So they have different tiers: Subscribe, Build and Save, and Magnum. So you have the $15, $30, $38, $48, $96. You can go all the way up to $55 and $110 a month. So for the $110 a month, you're gonna have a $10,000 loan installment reported onto your credit report. So this is another question I often get asked. If I go for the $10,000 instead of the $1,000, will my credit score go up even more? No, it won't. The way the credit report sees it, it just sees that you're making those payments on time, not how much the payment is. So it doesn't matter if you go for the $15 or the $110 a month account. It's going to be reported the same on your credit report. So I just go for the $15 a month, because why spend more when you don't need to? So one thing that you're going to want to be aware of when applying for this loan is the loan term. It says customizable up to 120 months. 120 months is 10 years. So you're gonna have this loan for 10 years. You're gonna be paying $15 for 10 years, or you're gonna be paying $110 for 10 years. There's also a one-time administrative fee of $15, and the APR is 13.5%. So building credit shouldn't take you that long. Shouldn't take you 10 years to build credit. So this product is something I kind of think twice about before I actually apply for it, because 10 years is a long time. Even if it's customizable, you shorten it to 5 years, 3 years, that's still a long time for a loan of $1,000. You can get the same result of Credit Strong by going into your local FCU and applying for a secured loan, and your interest will be way lower than 13%, and the loan term will be a fraction of 10 years. All right, so that one we're moving towards the bottom. All right, so let's move on to the next one, Self-Credit, and you can find them at self.inc, or you can click the link in my description. One of my main issues with this product is that it's a lot like Credit Strong. It's a secured loan that reports to TransUnion, Equifax, and Experian. But unlike Credit Strong, they will run a soft pull on your credit. One of the things that makes this product different from Credit Strong is that once you hit a certain point in your loan term, you can apply for a secured credit card using the money you've already paid into your loan. So let's see the different plans here. So it has everything transparent and laid out here. They have a small builder all the way up to an XL builder. It doesn't matter if you go for the $25 a month or $150 a month. It all gets reported the same. There's a $9 admin fee and an interest rate of 14.1%. The admin fee is lower than Credit Strong. Your total number of payments would be $600. You'd get back $520. Your total fee cost on the $520 loan is $89. So why do they have different tiers if it's all reported the same on your credit report? Well, it's interest, more interest for these guys here, right? On the higher note, right here, the $150 a month, the final fee is $146 versus the $89 here. So if I were choosing between Credit Strong and Self, I would choose Self. The interest rate is higher, point more or less, give or take, but the loan term is lower and the admin fee is lower. But like I mentioned, I hit my local FCU first before considering either one of these products. All right, so we got Credit Strong, we got Self. The last card is a Tomo credit card, and I do have this one myself and I really like it. So with the Tomo credit card, you have no interest or fees and they don't check your credit, and they are going to report to the 3 major credit bureaus. So the Tomo credit card is kind of going to work like the extra debit card, to where when you apply, you have to link an existing bank account, but this card is better in so many ways. First off, it's not a debit card, it's an actual credit card, and you will get a credit limit from $100 all the way up to $10,000. Now, the way they're gonna set your credit limit is by looking at your banking history. So they're gonna see your revolving balance, how much you're spending per day, what your daily average is, do you have any NSFs in the past 3 months. Now, the one thing that's nice about this product is that you can link more than one bank. So if you have more than one bank account, you can link them all to potentially get approved for a higher credit limit. Look at all these pluses here: no APR, no fees, and no minimum credit score. So with the extra debit card, you use the card, they withdraw that money the next business day. With the Tomo credit card, you use the card, you use it for the whole week. At the end of the week, that's when they're gonna automatically withdraw that balance. Another plus about this card is that when you apply using the link in my description, you'll receive 1% cash back on every purchase. Not a certain store, not a certain time of day, on every purchase. So if you're using your debit card that has no cash back, why not apply for this one and get 1% cash back on every purchase? So I'd put this card pretty up there in the ranking. So let's take a look at all these cards one more time. The extra debit card, a decent card. I would give it a decent score, but the thing I can't get around is a subscription fee. $7 a month to use this card. There's a lot of other credit building products out there that are free. For that, I would give this product 1 star. Credit Strong, a secured loan with no upfront money. There's no hidden fees. Everything is pretty much laid out. The one thing I don't like about this product is the long term and the interest. I give this product 2 stars. Self-Credit, another secured loan, but this product offers way lower loan terms from 12 months to 24 months, plus the option of applying for a secured card once you hit a certain mark in your loan term. For that, I give this product 3 stars. Next, the Chime Credit Builder Visa. No interest, fees, or credit check. The only reason I wouldn't give this product 5 stars is because you can't get this product outright. You actually have to have a Chime bank account to apply for this product, which is fine because the Chime bank account has a lot of perks. So I give this card 4 stars. Don't forget the link in my description when applying. Lastly is the Tomo card, and a card I use all the time. No credit check, no fees, no interest, and you actually get a credit limit. Even if it's only a week till you have to pay it off in full, but you're still getting that credit limit. On top of that, when you click the link in my description, you'll get 1% cash back on all purchases. So I give this card 5 stars. I hope you're still here at the end of the video because I'm going to show you another credit building product that's worth taking a look at, the Moneyline card. And Moneyline has a ton of different products. They have the Roar Money account, which is a bank account. They have Instacash. They have Moneyline Crypto, Auto Invest, Credit Builder Plus. So we're going to go to the Credit Builder Plus. So the way this works is you're going to want to apply for the Roar Money account, which is their Moneyline bank account. From there, you can apply for a loan up to $1,000, and they're not going to run a hard pull on your credit, but they will run a soft pull. This would be a secured loan like Self or Credit Strong. What makes this product different is that you can actually access a portion of your loan right off the bat, and the payoff term is not 10 years, it's only 12 months. And Moneyline reports to the 3 major credit bureaus. So the downside of Moneyline, and one of the reasons I didn't include them in the previous list, is because there's a $19.99 monthly subscription fee. But when you hit certain points using your Moneyline card, you will get cash back, which basically cancels out that subscription fee. Moneyline also has an Instacash feature, which lets you access up to $250 instantly with no interest. So check out the links in my description for all the products we covered today. I really want to thank everybody who supported the channel so far. It's really been growing faster and more than I thought it would. It motivates me to keep making content just like this. I want to thank you for watching. Check you on the next one.